What I'll show you in this video is something you never thought about in this way, and it might be a mistake that you'll be making every day and keeping you unprofitable. I'll show you why the market structure everyone is teaching is nothing but a lie. It doesn't really work, and you need to understand this new concepts. And I'll show you what you need to do instead. This is Molham, and let's get into it. First of all, starting with what everyone is teaching about the market structure, and they said, okay, this is the mechanical way in order to trade the market structure. So what they say is price is starting from here, for example, going up, and then it's creating a low, right? And then breaking above this high, for example. What's going to happen after is nothing, after taking this high, it's going to retrace into this range at this high and this low. Come in here, and then we're going to be having price taking this high again, coming lower into the range, going up in an uptrend. That's what we're going to see. Now, if you want to switch the trend, or we want to actually have a market structure shift, it's going to be breaking where? Below this point. So this is nothing but a market structure shift. And now, because we're having a high and then a creation of a lower high, right? Now we are in a downtrend and we're going to be creating lower lows and lower highs. Now, the logic behind this is that we are creating this high and then this low took this high, which means that this is now is a strong low. This is a weak high actually, right? And we broke above it. We now create a high in an uptrend. We'd be making what? We'd be creating weak highs and then strong lows. And what does that mean? That means because we're trusting those lows not to be broken, And this is what they teach. They said, okay, always look at the market this way, breakout structure here, and then price coming and retracing back into the range. Another time we have a breakout structure and then price coming back into the range. And then when we have a low taken, it's going to be a market structure shift. But the reality of it is this really doesn't exist. This perfect scenario happens sometimes, but it's not actually what the market does every day. It rarely happens, and it's always going to be more complicated than this. That's the mistake that people are doing. They are following this, but I'll show you what not to do and what to do. Okay, so this thing doesn't really exist that much. And even when it happens, it would be tricky sometimes. If the market is this easy, when we break above the high, we come back here into retracement back into the range, and then we go up from there. It's gonna be really easy. The market is gonna be, even the banks are not gonna make money. The market is created in order for the banks to make money. It's not us. We're still struggling to make money, so we gotta be different. We're gonna find our system that really works, right, with the banks. So this thing doesn't really work, and that might be a surprise to you. It might be working sometime, and there is another way that works. Our sponsor, Blue Guardian, is the only firm that gives you a tool to protect yourself from hitting your max daily loss and prevent you from overtrading. And it is very simple to use. They also have a new unlimited time evaluation with low profit targets and no trading days requirement, so you can get funded in the same day. Blue Guardian is a firm that I trust. Use the link in the description below and use the code MOLHAM to get 10% off your next Blue Guardian evaluation. So this weak high and strong low, and then we keep doing the same until we broke the low. Now we have a market structure shift. Now we're going to be doing what? We're going to be creating weak lows and strong highs. It's going to be the opposite. Why? A strong high means we don't want this to be violated. A weak low, it means we need this low to be taken. That's the way people will be teaching you. And I know there is fractal structure here, going lower, something like this. Yeah, that's true. But still, it's more complicated than this. Now, let me show you why this actually doesn't work. And I want you to do the same. I want you to go in any time frame, any asset, go and look at the market. So let's say we are in a Dow Jones, or you could go to NASDAQ, any time frame. You do it yourself, okay? It's not me going over this. I know this is in hindsight, but I want to show you that if I start from any point on this chart, it's still going to be the same. Now, what a lot of people would teach you is, okay, we have this low that is taken here. What is this? If we consider this against the trend, then that's a market structure shift, right? So we got a market structure shift here, which means that now we have this strong high and weak low. So we are in this range, and that's what a lot of people would teach. And that's what you'll be thinking that, okay, this works. Now I find a strategy that really works. And then when you go back test it, because they're doing nothing but cherry picking, right? They look at the perfect scenario. So for example, if I want to go and look at the perfect scenario, then I don't know, maybe somewhere in here. I mean, it doesn't really work, right? Or maybe here. So breakout structure, first coming back into the range, a small profit, and it works sometime. Yeah. So for example, here we broke below, we came back into the range. That's what they look for. But if you look at the general market, or anywhere in the market, then you're gonna see that, okay, we took this low. That means we are trading inside of this range from here to here. And what we look for is this high not to be taken. And a lot of people would be looking for this fair value gap to be respected. What happened after, or maybe this order block, right? So if you consider this order block, then you see how you're always having a reaction, and the intention or the objective or the goal of that reaction is to induce you to enter. So even if you don't use limit orders, you use market order or you wait for reaction, then at this fair value gap, there was a reaction here. You enter here and you're stopped out. Again, you enter on the order block right here, and your stop loss, for example, is above the high. And there you go. A small reaction from here going up. Now, what is taken now? This strong high is taken. So this is taken and means that, okay, looks like we're continuing up. What do we have? This range of strong low, and then we have a breaker structure to the upside. So what are we expecting as of now? This range from this low, right? From the strong low to the weak high, this one, that's the range that we need to trade in. Look for any order block or any fair value gap in this range, and then we go up. What we're expecting is this low not to be broken. But eventually, what happened here? And look at what's happening exactly. It's a sweep. It's not even, a breaker structure with a displacement. It's always a sweep because there is a lot of liquidity here. It's an inducement because what a lot of people are doing is entering here, right? Or entering here, for example, and then having a stop loss below. So creating a big amount of liquidity, huge pool of liquidity here. And that's what the inducement is. So it's going to take this low and then go up. Now, looking at the same logic, any higher low, right? Any higher low. So for example, let's say we have this low right here. We broke below, even this low, we broke below, but eventually we took the high again. So it's never in that order of the market section that people are teaching. But what happened here is we took the high again, we took this high, and we created this new strong low, right? Which we expect not to be taken, but eventually sweep here going up. And again, what happened here is this level taken, right? And we have this strong low. And again, it's taken. So there is a relationship, or there is something that we need to understand. The logic behind this is not that, okay, we have strong highs and strong lows. There is something other than that that we need to understand. And it happens over and over. So for example, this high took this low, and now we have price coming lower, right? So if you consider this range, from this high to this low, and look for an entry from the fair value gap or the order block, but eventually a small reaction and then taking the high again. So there is something that we need to understand here, which is the concept of inducement. We need to understand inducement because what is happening now is a lot of people recognizing patterns other than spotting liquidity and fair values. So fair value is offered when we have price going lower into one direction, leaving inefficiencies here. Price actually come back to them and go up. Even if we had a range here. And the market structure logic that a lot of people are also aware of is, okay, we took this low. That means we just expect this high not to be taken. But a lot of the time, it's going to be taken. Now, again, what's the logic of this is people just recognizing these patterns, right? And thinking that, okay, now we have breaker structure here with this strong high, ignoring everything here. All the structure here is ignored, only focusing on those highs and lows, the last ones, right? This one and this one, and only focus on this and thinking that price needs to be traded within this range. That's the mistake are doing. And when they enter randomly from here, especially beginners, when they enter from here, where does their stop loss goes? Above the high. That's why even if there is a small reaction, just to let people enter and trust the trade, then gonna go lower and go up, take the high as a turtle soup and comes lower. Now, what did we learn from this? That one level of turtle soup, a very high probability one, is the market structure inducement. And that's my theory. That's how I look at it. So if we're coming lower, going up, coming lower, this is a high that took a low. If I see price coming up, usually this high, a lot of the time, is going to be taken. And if I look for a lower time frame entry above this high, a lot of the time, I'll be having a turtle soup entry going lower. So highs that took lows are potential turtle soup entries, okay? And the opposite is also true. So lows that took highs are also, there is a possible turtle soup in there. That's one thing that you gotta write it in your notes, apply it, mention me in Twitter and say, okay, Mulham, yeah, I can see that. I can see that this low, for example, took this high, right? And then it was turtle soup. Again, this low took what? Took this high. It's turtle souped, right? And I'm gonna show you at the end of the video how you can actually identify or specific framework that you're gonna look at. And when this happen, there is a potential of a turtle soup or at least an inducement of the market structure. A lot of people, as I said, focus on the recent high and low and they ignore everything. Now, this is what we see here. Now, if you go to anywhere in the chart, right, randomly, and we're gonna discuss. So for example, here, so this is a high that took this low. Again, it's turtle soup. And there is something about this trade or this specific framework that I'm going to be mentioning about in the end of the video. Okay, so I'll give you a very clear framework to when to expect this. Now, let me explain how you can actually avoid this and use it to your advantage. The first thing is, imagine that we are going lower in a downtrend, okay? So we're creating this low, this high, and going lower. When to expect that this range now is going to work? So trusting this as a strong high. When do I expect this? And when do I expect the opposite of this? So when do I expect this range to hold? And when do I expect this high to be taken? Now, the thing that we need to focus on is imbalances, fair value gap. So if I have an imbalance that is partially filled or fully unfilled, then mostly this strong high is not going to be respected, right? Price is going to go here and take it. Maybe reacting from here, maybe going up, okay? Because maybe at this point, price just decided to go up. Now, this is one scenario. So fair value gap that is partially filled or fully unfilled, then we expect this high to be violated. That's one of the scenarios. And this is actually the highest probability scenarios. And this is where a lot of people are losing money. They think that, okay, just because we have a strong high here that took a low, then this range should be holding. And that's just very funny to me when I look at the chart and I see this and I see people backtesting their market structure, ignoring the fair value gaps because now this is a fair value for the market. Why not come back to it? Why just trusting your market structure the mechanical way when there is an efficiency here that needs to be filled, right? So your strong high is gonna be disrespected, definitely. Now, this is one of the scenarios. Another one is simply, and this is something that I realized from looking at the chart. I say, okay, how can you move from here to here without even thinking in logic, right? So what I mean is price coming lower. We have this big range, right? So we have this high taking the low, and then we went from something like this because they follow a mechanical way for the market structure. But what they fail to do is use logic. Just use your brain for once, and you're gonna see that this is actually doesn't make sense. Now we are in this big range, right? From this high to this low. So now this is actually a weak low, and this is a strong high. Now a lot of people would just look at the this low, right? And price is going to come here and go lower. What they're going to consider now is this as a strong high. And then when there is a retracement, that this is now a weak low and price should actually respect this range here. But what you notice from here, look at the difference between this right here, this range and this range, the small one here. So see the difference? We're moving from big ranges to small ones. And you're telling me that price needs to ignore all of this range being unfilled with all of the inefficiencies inside of it and only trusting this small range with an efficiency here? Definitely not. Price is going to disrespect this whole range, coming back to the big range. That's where a lot of people following just the mechanical way to identify their market structure, that's where they are failing, right? So we're basically moving from a big range to a very small one, and you're expecting the small one to be holding without filling anything in the big one. It's not really going to work, right? And you can see there are a lot of the times where we actually move from a a big range. For example, here we're moving from this big range from here, from this low to this high. So you see how big the range is? And then we're moving from this range, the big one, to the small one when the high is taken. So the people who follow the mechanical way, they're going to consider this now as a strong low and this as a weak high, right? Or this one actually, a weak high. What happened after is nothing but price disrespecting and violating that one as an inducement. Why is that? Because now a lot of the people, beginners especially, who are trading only market sector, they're looking at this fair value gap here to be respected. And where's their stop losses? Below the low, a strong low. And it's taken here, violated, turtle soup going up. So you see how we have a big difference between a big range and a creation of a small range. And this goes, this is how you use your logic, right? So again, the same thing here, but we did not get a turtle soup because we did not break above the high. But still, I want you to think about the range, right? We had this big range, and then we're about to head another small range, just like this, but we had no break above the high, right? So that's how I want you to think of logic. That's one thing. Another thing is, you see how we're leaving this big fair value gap, right? Big fair value gap here, and we're creating small ranges, small ranges, small ranges, and we're ignoring this big one. Eventually, it's going to disrespect all of the lows that you consider strong lows. It's going to disrespect all of those and come back to the fair value gap, because this is just a huge range where there is a lot of inefficiencies and they need to be filled. Now, the same thing goes here. So, for example, here we had all this trend coming lower, going up, coming lower, going up. So we were in an uptrend, creating strong lows, but because there is a small fair value gap that is unfilled here, price actually came back to it and go up. So if you understand this, you will know why price actually went there and disrespected all of your, possibly strong lows, which are not in reality, and it kept going up. So that's why your market structure doesn't work. That's what you're failing with market structure. You got to use your logic in this case. You got to understand that when we are moving from big range to a small range, there is something wrong. And when we have big fair value gaps that are unfilled, be sure that price is going to go there eventually, either now, later, after a week, after days. It doesn't really matter. We don't know, but it's going to go back there. So hopefully this was insightful. Hopefully you learned something new today. Hopefully I was able to add something to your knowledge. I really wish you the best. Make sure to join the Discord, hit the like button, leave a comment. I love your support, guys, and I'll see you in the next video. Bye-bye.